Welcome to I Call Bullshit Property Podcast, where we separate real estate fact from fiction. I'm Reece Bettle, and in every episode we uncover the truth behind the property market's biggest claims and trends. Joining me as our resident expert, Lachlan and Reece. He's seen it all and isn't afraid to call out the bullshit when he sees it. Lockie, let's jump into our today's topic. Melbourne is the next property hotspot for investors.
It's been talked about a lot, hasn't it? We've seen a lot on the socials.
100%. And I think in the last 6-9 months, I've seen all the negatives, all the positives, and it just feels like there's a lot of commentary behind this particular topic. So we're pretty excited.
There's extremes, right? People are either real pro Melbourne or completely against it.
Yeah.
Spitting out land tax issues, net interstate migration numbers. So let's get into it.
Beautiful, mate. Okay, so what are, I guess, from a Melbourne perspective, I mean, it's been pretty obvious the turmoil Melbourne's experienced post-COVID. When you're looking at, you can probably touch on some of the data points off the top of your head, which I'm assuming you do, in terms of what happened to the market sort of post-COVID. But I guess what are the signs that the Melbourne property market is turning around in 2025? So obviously we mentioned there's a lot of a negative, back end of last year and the last few years, but it definitely feels like there is now starting to get some positive sentiment in the market. So what's some of the key signs that you're seeing that Melbourne's starting to turn?
Yeah, so to answer that first part of what's happened with Melbourne, because all of a sudden it's probably experienced negative growth for the first time in 20, 25 years, right? So it's a huge surprise. Everyone's Melbourne's now the biggest city in Australia. So obviously they included Melton in the figures, and it's now $500,000 larger on a population basis than Sydney. So how's our largest capital city in Australia going through arguably the first correction that it has in 25 years. So when we look at Melbourne and look back the last 10 years, it sort of peaked in 2017, and prior to that, Melbourne went on almost like a faultless run of growth. So its previous stagnation up until recently was back in the early 90s. So really...
So is that the most successful market then?
Most consistent.
Most consistent.
Certainly the most consistent. If you look at Sydney, people can't really realise when Sydney was affordable, but it was around COVID time, right? Perth and Sydney median house prices were almost identical, and Melbourne at that point was slightly below Perth, and then obviously Sydney went on an absolute rampage, and Melbourne's been really, really consistent. So it went on a run at 8% compounding growth since 1995 to 2017. Almost, if you look at the graph you had in front of you, it's almost like a perfect incline with no stagnation. So you see other markets like Perth, you see typically a big upswing followed by a correction or a stagnation, big upswing. Same with Brisbane. Adelaide's quite similar, but just doesn't have the long-term compounding growth rate as Melbourne. And Sydney's gone through extremities of growth, flatness for 2 or 3 years, serious growth. So it's a really consistent market. But it peaked in 2017, and then the market started to falter. I don't know if you remember the time, but they changed the interest-only model, so it was very difficult interest-only loans, so the investor market come out. And so it was the first dip in the market.
How long was that for, the interest-only? Was that a period of time?
Yeah, it's about a 12-month period. So that was when Royal Commission stepped in, and there was a lot of changing because they were really trying to put the handbrake on the Sydney and Melbourne market, but typically Sydney, because it was getting out of control, and one of the levers they could pull was, well, let's stop the investment activity. So pretty much eradicated investment loans, and that dipped the market. And then obviously there was a COVID hit, and there was nationally a spike in house prices. Melbourne was the lowest performer. So we saw Adelaide, Brisbane, and Perth sort of hit 30-35% growth periods. Regionals do 40-45% periods. Melbourne only did 18% growth, and that was really primarily driven over a really low cash rate. So if you would,
it was the most locked down city in the world as well.
Yeah, it was.
I mean, I was living over in London at the time, and we got hit first, I guess, in terms of the lockdowns, and we thought it was bad, but we got off lightly compared to Melbourne. It just felt like Melbourne was in a lockdown for 12 months.
Yeah, exactly. And the way the state government handled that COVID period is, I'm not going to talk about it in detail here, we're not politicians, but was handled poorly, and the sentiment in Melbourne meant that a lot of people moved away, right? So people were sick of the lockdowns. There was a mass interstate migration out of Victoria, particularly Melbourne, and that's why we're seeing Brisbane really benefit and Queensland benefit off post-COVID
choices,
massively. I think people have a realisation, we just want to get out of here. Not only that, the government essentially ran out of money, huge debt, had to give up the Commonwealth Games, and a lot of the big major projects that attracts a lot of employment were put on hold or deferred. So it was a weak economy, followed by with a lifestyle that people wanted to get away from. So we've seen a huge exit, and that's why Adelaide and Brisbane really benefited off Melbourne going through such a tough time, and Perth potentially benefiting off that as well. And then since then, we've seen a negative decline in house prices. So what does that mean? So in summary, if you take out the 18% bump in COVID, which was purely on a cash rate, really low cash rate, the Melbourne market has been on a steady decline since 2017. And if you look at the data, units you're buying at the same price you could have in 2017. Houses are marginally above where they were in 2017. So for the first time in over 25 years, Melbourne is in an 8-year stagnation. It's the first time in 25 years. So that starts to get quite interesting because, Melbourne for the first time is really affordable. And if you look at it in comparison to the other capital cities, just the median house prices alone, you've got Sydney there at 1.2 million. You've got Brisbane now at 910,000, Adelaide at 825, Perth at almost 810,000, and you've got Melbourne at 786,000. So for the first time since I've been in the game, well over 15 years, Melbourne, on the hierarchy of unaffordability, is now the fifth most affordable market in Australia.
Which is crazy. So I think that's a great understanding on how Melbourne got in that situation, and what the current state of play was. Probably either now, I guess you might correct me, or maybe up until last year. But going back to those, the key turning points, what do you think it's starting to like? How's it starting to show signs of recovery? Some of the stats I've seen is we've seen some month-on-month growth in Melbourne for the first time in 10 months, according to the CoreLogic data. But what other things are you starting to notice that's showing that the tide's turning?
Yeah, so the migration data's back. Yeah. So the problem was interstate migration was significantly negative, so losing 40, 50,000 people to other states, which is a huge problem when you have no overseas migration. There was 2 years there where no one was coming into the state, and you're losing interstate migration. So that exodus was a huge downturn for the market. Fast track to 2025, that obviously overseas migration's back, and they've arguably overdone it. And when you look at historically, Melbourne gets more overseas migrations than anywhere else in the country. It always has, and certainly more than Sydney. So it's now got more than its fair share of overseas migration. But that interstate migration is now in a positive surplus for the first time in 5 years. So we're starting to get all those people arguably that have moved away for various reasons, either returning or coming back to Melbourne or visiting Melbourne for the first time because of the affordability play. They're getting priced out of Brisbane, priced out of Adelaide,
which is crazy,
and going to Melbourne, certainly priced out of Sydney and moving to Melbourne because it's now affordable. Yeah. And it's still a key jobs market, arguably the biggest jobs market in Australia. So your incomes are going to be high and comparable to that of Sydney. But to buy, all of a sudden, for the first time ever, is now it's affordable. Yeah. So, to summarise that, you're seeing huge mass population growth into Victoria, and particularly Melbourne, into what is arguably a very undersupplied market.
What about investors? Like, obviously, the data's there supporting strong migration, people returning. What about the reason we were keen to talk about this is we hear a lot about this from people coming to us wanting to invest in Melbourne. We see a lot of other people across social media talking about this as well. What's kind of changed from an investment standpoint, and why are they returning to the market, or is the growth purely driven by home buyer activity?
Yeah, no. So the point there is Melbourne historically is a very difficult market to invest in because the yields have been so low. To give you context, historically you could buy in Brisbane or Adelaide on a 3.5% to 4% yields. Perth is more of a 4 to 4.5%. When you looked at Melbourne historically, it was 2.5% to 3% because the rental returns in comparison to what it cost to buy a property was so much lower. And lots of reasons for that, oversupply, the fact of, won't dive too much detail, the fact that it is so much more expensive to buy there historically also plays a role. But what we've seen is a vacancy rate decline significantly. 2019 it was up 4 or 5% vacancy rate. We've seen that being crunched down to 1%, and we've seen rents rise significantly. So over the last 5 years, we've seen rents rise almost 60%. So for the first time since really I can remember, it's become, the yields have come to the point where it becomes really attractive for investors. And what does attractive look like for investors? Typically, you need at a minimum yields to be above 3.5%. And that's, it does vary based on the cash rate, what becomes attractive or what doesn't. But now at 3.5%, there's opportunities in the market at 4.5%. So that cash burn is far less than it was historically. So that's why Melbourne has been neglected, I think, previously as an investment market, just because the cash burn on an established property at 2.5-3% might cost you $80,000 a year to hold that property. That becomes very difficult, puts a lot of pressure on the asset. Where now that cash burn might be as little as $20,000 or $15,000 a year, which is far more palatable than it has been historically.
You mentioned there on the rental side of things, I think it was a 60% increase in rents over the last 10 years?
Last 6 years.
Last 6 years, I should say.
10% in the last 12 months.
10% last 12 months. That's where my brain's going with that one. The vacancy rate's interesting though. So you said it's down to 1%. What's a healthy vacancy rate? Is that below what a...
Oh, significantly, yeah. A balanced market sits at about 2.5 to 3.5% vacancy. A strong market is sub 2.5%. So the supply and demand equation, anything sub 2% is what we consider very strong market. And you look at the decline; it's almost like a cliff. When 2021, that, like I said, it got up to 5.5%. We've seen that fall sharply to almost a flat 1%, 1.1% currently, and that's on the back of number of reasons, right? That population play that I said, huge migration into Melbourne, overlaid with the post-COVID issue of being able to bring on supply. 50% increase in construction costs, inability to get labour to complete builds, and a market that hasn't been built up with a lot of pent-up demand. So it means they just haven't built enough bedrooms. And that lag is going to be significant, because at 1.1%, it's clearly a problem. It's clearly not enough problems in Victoria. If the government tries to do something about this, and obviously the Labor government talking about all these promises about housing, we're 2-3 years away. So I think in the short term, when I say short term, the next 2 years, we're going to see a sharp rise in rents, a further contraction of vacancy rates potentially, which that is going to lead into, arguably, more investment activity, because those yields are going to rise and rise aggressively. Yeah,
it's fascinating. And I think if we were looking at, so someone is ready to invest in Melbourne, what's the first step they should take? So you mentioned there, obviously, a lot of people, I'm assuming, haven't invested in Melbourne over the last 6 years, or
probably the last decade, to be fair.
Maybe even longer. The signs on migration, from what you're saying, are super positive. The rents and the lack of supply, and also the rental vacancy. I mean, it's sounding like these are some really key factors to push you into the market from an investor standpoint. What's the first step? So if someone wants to get into the Melbourne market, what's the first step they should be doing right now?
They need to understand the dynamics of the Victorian market and Melbourne market in terms of how it operates. It's very different to that of Adelaide and Perth, as well as it's completely different to that of even Sydney and Brisbane. So it's not a market where you can tread lightly and just go in there, or a regional market where you can see you can buy sight unseen, and it's going to be no issues. It's very much a high auction market. There's different sort of nuances on how Melbourne operates, right? Public transport's a really, really important factor, where that may be not as imperative in Adelaide, Perth, or regional. It's a small New York in the sense that traffic's getting worse. It's the largest population city in Australia now, so having access to transport is a huge priority, and you may see a 10% uplift by just being close to key infrastructure nodes. So you really need to educate yourself with the market and the local dynamics, because it's very different to other markets in Australia. Contracts are very different, and the extremities are huge in Melbourne, where you go from a really quality pocket of a suburb to somewhere you certainly don't want to be investing, can change in the manner of a few hundred metres, where typically in most suburbs across Australia there's lots of consistency. So you just got to be, I think, mindful of what you're doing when it comes to Melbourne, and make sure you familiarise yourself and educate yourself.
Yeah. And in terms of, say, a property cycle, where do you see Melbourne at the moment? Obviously, you've mentioned some of the key facts there, but are we now in that sort of buying phase of the cycle? Where do you see Melbourne right now?
Yeah, look, you're never going to pick the absolute bottom of the cycle.
Yep.
And there's lots of conversations that it's too early for Melbourne. My opinion is we're past the bottom of the cycle. I think the bottom of the cycle was late, 2024. I think the bottom of the Melbourne cycle was, if you're going to pinpoint it on a dartboard, was December 2024. And the bottom of the cycle has passed, and we're now into that next phase. And that's where the Melbourne market sits currently. And I think the data sets that are coming through, overlaid with a falling cash rate, is going to show signs of growth.
And the sentiment feels like it's positive now.
Very much so.
You mentioned bottom of the cycle was probably December last year. I'd agree with that, and I think from the sentiment we're hearing, not necessarily the data that's now come out since to show a growth, whether that's looking at the auction clearance rates as well. There is a higher conversion than what it was last year. I don't know if you've got.
Yeah, absolutely. With recent, so this quarter's up to 70%, which December we're talking 50% auction clearance rate. So it's a big difference, and that is a really good indicator for Victoria and particularly Melbourne, and that's the difference in that market. Auction clearance rates are super relevant in Melbourne and Sydney, as well as partially in Brisbane.
And just to explain that for the audience that maybe isn't familiar with auctions, what do we mean when we say auction clearance rates?
So how many auctions? If there's 1,000 auctions on the weekend and 800 properties are to sold under the hammer, then 80% clearance rate. So it gives you a really good, I suppose, overview. And if you're looking to track the intensity of the market, if you did one thing and one thing only, it'd be following the week to week auction clearance rates. And yes, there's some nuances that don't come through. So sometimes it doesn't factor in the things that sell after auction or may sell off market pre-auction. But it's a really good, if you just did a baseline weekly check on that will give you a bit of a pulse check to see where the Melbourne market's at.
Yeah. And what kind of properties are probably presenting the best opportunities at the moment? Are we looking established with a bit of land component? I know we talk about this on each episode from an investment strategy that forms a big part of where we buy and why we buy. Or what about apartments as well? That hear the classic stories. We've probably spoken about this on previous podcasts as well, where these off-the-plan apartment purchases in Melbourne have gone horribly wrong, gone backwards. And then also maybe the ones that need a bit of love, renovators. What do you see out of those sort of asset types, properties presenting the best opportunity, or all of them, I guess?
That's good. It's speaking with clients that aren't familiar with the Melbourne market. The first thing is Melbourne's cheap. I'm hearing Melbourne's cheap. I've seen an Instagram reel and it's super affordable. Melbourne is affordable, but it's not cheap. And the premium suburbs are still far more expensive, pretty much than anywhere else in Australia, with the exception of Eastern Sydney. And people sort of can't comprehend that, but $10 million in Melbourne actually doesn't buy you a lot in those premium suburbs of Toorak, Hawthorn, Brighton, where that pretty much buys you a lot in areas such as Adelaide, Brisbane and Perth. So it's affordable in sort of out of fringe areas. It's certainly affordable in higher density space, because you're right, Melbourne has been prone to oversupply at various periods, and a lot of that investment off the plan apartment stock has created horror stories for investors, certainly not our investors, but across the board you've heard that quite a bit. But for the first time in a long time, that unit market, probably the more unit villa market, medium density, represents really good value for two reasons. The yields are certainly much higher, and understand that your Melbourne yield now is going to be comparable to that of probably Adelaide and Brisbane. You're certainly not far north of that. It's going to be less than Perth and certainly higher than that of Sydney. But on units and villas, you can achieve that 4.5%, 4 to 4.5%, which becomes really, really attractive for investors because the cash burn's not as significant. But because of the undersupply and the fact that there isn't a lot of apartment building or building taking place in general, because the market hasn't been there and the constraints with that, I think that unit market's going to see a serious run. Typically in a market, this is broadly speaking, you normally see houses go on a run, as we've seen. Perth's a great example. Houses did 50% growth before units really started to make a move, and then we're seeing units tail that by probably a couple of years and really start to move. I think Melbourne's going to be a little bit different, where we might see established properties move at the same rate as units and villas because that serious undersupply.
100%. And you've only got to look at the infrastructure of a city like Melbourne compared to Perth. There are still big blocks of land, houses in close to any city in Perth that people can obtain. Whereas you go to Melbourne and they are, it's a much smaller land size you got there. So
it's density. It's density, and that's where the government's investing. Like key areas, they've got identified 12 infrastructure nodes where they're iconic areas for Melbourne, and that's for those listening that are going to take a position, identifying those key nodes is going to be really, really important because that's where the government have tiered to where they're going to invest for infrastructure, for transport, for amenity. They've also created a high density plan and frameworks in those areas, so the benefits of that are going to be substantial. So understanding those areas and those localities are going to be really, really important.
What are the types of risks that if an investor first time investing in Melbourne should be aware of?
Again, what we spoke about before, just understanding the nuances of the Melbourne market, very different to other markets around Australia. Contracts are very, very different. It's a high auction framework, so understanding, being familiar with that. But also, as I sort of briefly touched on, is the risks of not having local knowledge in Melbourne is probably more severe than I've seen in other markets because the difference between a quality pocket of a suburb or even a suburb to suburb can vary dramatically within a matter of kilometres, if not, like I said, 200 or 300 metres. But also understanding infrastructure in particular suburbs. We spoke off air about numerous out of fringe suburbs that are becoming problematic because they don't have train routes and people living in these suburbs where they're building up and building lots of house and land packages. Yet people can't get into the city if they don't have a car.
You're hearing developers not having their office open until 11 a.m. so they can, when people come in to try to buy a plot, there's no traffic in there because
there's one road in and out. They don't have trains. So knowing that's huge because people in Melbourne, the younger generations don't have cars. So being able to walk to the train station is a huge, it's not London, it's not New York, but it's the next tier behind that in the fact that most people don't have a car. So understanding that's going to become really important depending on the type of asset you're buying. So I just think the extremities are more severe in Melbourne than anywhere else in terms of quality assets and poor assets. I think public transport's, certainly you can't overstate the importance of that, and understanding those key nodes of where the government's really investing is got to be sort of at the forefront of your investment strategy.
Yeah. One of the things you've kind of touched on at the beginning of the podcast, and I would say, sentiment from what I hear, this is a very topical, and this is probably something that potentially could be a misconception, but is the whole land tax in Melbourne and what sort of negative impact that could have for investors. Do you see that as a something that should deter investors from going to Melbourne, or is it a do you call bullshit? Is it a misconception? Like looking at some of those, the land tax you would be paying if you were to invest in Melbourne.
Yeah, it's been overstated, and it's the government had to try to do something, the state government, to show that it was trying to recoup some money. And the first thing they hit was the headline media was Melbourne's getting taxed, the land tax, and obviously tenants' rights, or those sorts of things. But the tax was heavily targeted to those, land banking. And significant land banks we're talking not just an investor at 500, 700, 800,000. We're talking millions of dollars of land that they're just not doing anything with. So the fact that none of those entities are all in the same name, so obviously land tax is a state-based tax, but obviously it's the entity you purchase it in. On an individualised investment, it's not significant. I think you've got some data there in terms of what it costs. Who would have thought you're prepared? You've got some numbers here. I'm glad.
Who would have thought we prepared for this episode today? No, I had a look on the Victorian, tax calculator for land, and as you mentioned, it probably is targeting more those higher price points. But for a $600,000 land value, you're looking at just $2,250 per annum. Yeah,
so it's not dissimilar to other markets, right? And that's the problem. It's targeting those that have got land, and typically the worst that we hit, that those that own property in Melbourne but have got a beach house down in Sereno or Portsea, and they're getting taxed like the threshold. It's compounding the effect. So, and they're all in the same entity. They might have $15 million worth of property. They're getting smashed, and it's an easy headline story for the government because they're hurting those that can afford to get hurt, right? So but the problem is that sentiment got dragged through the media. Like, it's not great to invest in Melbourne because you're going to get smashed with land tax. Those individual investors, even if you're buying multiple properties, under the threshold, you can be quite strategic with that, you're not going to see the impact.
Yeah, and you've only got to compare, say, Perth as a market, obviously been the last kind of big bull run that they went on. You look at the management fees for property managers, it's higher in Perth than what it is in
significantly. Yeah, it's
significantly. So you can
average
almost
fees
kind
be
of
like 8.5 compared to Melbourne 5.5.
Yeah, so you can almost kind of balance those things off. I
And
think,
insurance is arguably lower in Victoria and Melbourne, so we would look at the net. So when we've run the numbers and you see the actual net holding costs factoring in those additional things such as land tax, rates, utilities, property management fees, very comparable to other capital cities such as Sydney, Brisbane, Adelaide and Perth. So certainly not something to be scared of. It's been overstated, and so has the tenancy laws. Right, everyone's like, well, I don't want to buy a property there because I don't have any rights as a landlord. That has been a little bit overstated as well. Certainly, tenants' rights have increased, but not to the point where it's going to discourage investors. And little things like you can't disencourage pets, and if you want to exit a tenant, you have to have pretty valid reasons to do so. There's caps on rental increases of 10% per year. So they're things. It's not really any different to other markets around Australia. It's just been overstated significantly. Yeah. So I wouldn't be too concerned when looking at those two elements, be that tenancy issues or landlord rights, as well as the land tax problem.
Beautiful. So Lachlan, what's the verdict then? Melbourne is the next property hotspot for investors. I think I know where this is going. Fact or fiction?
Do I call bullshit? No, I can't. I think it is a good opportunity. I think it's like I said, there's a lot of noise in the market at the moment. It's either really, really positive or it's really, really negative. Headlines are boring if they're not on either side of the fence. So I think it's a market that's probably seen the worst, and we're seeing those green shoots in 2025. And if we had to pick the bottom of the cycle, I think it was late last year.
Make sure to join us next episode. Stay informed, stay curious, and keep calling out the bullshit.